As an investor, you're probably aware of the various investment vehicles available such as stocks, mutual funds, bonds, and real estate. However, you may not have heard about ETFs, which are quickly becoming popular among investors. What are ETFs, and why should you consider adding them to your portfolio? This comprehensive guide will help you learn everything you need to know about ETFs. What are ETFs? An ETF exchange-traded fund is a type of investment fund that trades on stock exchanges, making it more like a stock than a traditional mutual fund. ETFs aim to track the performance of a particular index, such as the S&P 500, Dow Jones Industrial Average or Nasdaq 100, allowing investors to buy into a diversified portfolio of stocks with a single investment. ETFs can also invest in commodities, currencies, bonds, or other types of assets. Unlike mutual funds, ETFs are traded throughout the day on an exchange, meaning their price fluctuates just like the price of a stock. This makes them an excellent option for investors looking for flexibility, liquidity, and cost-effectiveness. Benefits of investing in ETFs. Diversification. ETFs are a great way to invest in a diversified portfolio of stocks, meaning you can spread your investment across industries, geographical locations, and asset types. This can help reduce your risk in case one or more of the investments in the portfolio doesn't perform as expected. Low cost. ETFs usually have lower fees than actively managed mutual funds because they are passively managed, meaning they aim to match the performance of an index, instead of trying to outperform it. This can ultimately result in higher returns for you as an investor. Transparency. ETFs are transparent in the sense that their holdings are publicly disclosed on a daily basis. This means that you can easily see which stocks, bonds, or other assets are contained in the ETF, making it easy to track your performance and make investment decisions based on your goals. Flexibility. Since ETFs trade like stocks, you can buy and sell them throughout the day, giving you more flexibility and control over your investment. Also, there are ETFs that cover almost any sector or asset class, from specific sectors of the economy to emerging markets, small cap and large cap stocks, bond ETFs, and many more. Drawbacks of investing in ETFs. While there are many benefits to investing in ETFs, there are also some drawbacks to consider before taking the plunge. Liquidity. Although ETFs are traded throughout the day on the stock exchange, they may have lower trading volumes, meaning that it could be harder to buy and sell in large quantities at the market price at times of high volatility. This can lead to price discrepancies between the fund price and the actual net asset value of the underlying assets in certain situations. Tracking error. Although ETFs aim to track the performance of a particular index, there may be slight differences in performance due to factors such as tracking errors and fees. It is important to understand the methodology and the tracking error of the ETF, which is usually called the expense ratio, to help you select an ETF that suits your investing objectives. Choosing the right ETF. Now that you understand the benefits and drawbacks of investing in ETFs, it's time to learn how to choose the right ETF for your portfolio. Asset class. The first thing to consider is what asset class you're interested in, such as stocks, bonds, commodities, real estate, or other types of assets. From there, you can choose the right ETF to invest in that matches your goals and level of risk tolerance. Cost. The expense ratio is important when evaluating an ETF as it will determine how much you'll pay in management fees for the fund. Always strive to invest in a low-cost ETF as the savings generated from the lower expense ratio translate into a higher return on investment. Performance. Take a look at the ETF's historical performance track record, preferably over at least 5 years, to understand how the ETF has performed over the long term. Liquidity. Check the average daily volume of the ETF, as well as the bid-ask spread. A high daily trading volume and narrow spread will allow you to buy or sell an ETF more quickly and at optimal market prices. Diversification. Look for an ETF that provides a balanced mix of holdings among financial subsectors, market cap sizes, and geographical regions. Conclusion. ETFs are becoming increasingly popular among investors, and for good reasons. They offer diversification, flexibility, and low cost, making them a valuable addition to any investment portfolio. However, it's essential to understand the benefits and drawbacks of investing in ETFs before making any investment decisions. By considering factors such as asset class, cost, performance, liquidity, and diversification, you can choose the right ETF that suits your investment goals and aligns with your risk tolerance. With so many types of ETFs available, it's essential to narrow down your search criteria and choose wisely. What do you think about ETFs? Have you invested in them? Leave me a comment below and tell me about it. Thanks for stopping by Free Market Economy, and please subscribe before you leave.